In the spring of 2025, the global economy was rocked, not by war or natural disaster, but by a sudden and sweeping barrage of tariffs unleashed by the Trump administration's renewed America First policy. The world watched in disbelief as the rules of international trade were rewritten almost overnight, sending tremors through financial markets and boardrooms from New York to Shanghai. The United States imposed a staggering 145% tariff on all Chinese goods, effectively slamming the brakes on direct trade between the world's two largest economies. Cargo ships sat idle at ports, containers piled up, and the arteries of global commerce began to clog. The shock waves rippled outward, disrupting supply chains that had taken decades to build. China responded swiftly, retaliating with 125% tariffs on American products. The standoff escalated into a full-blown economic war, with both sides digging in and refusing to back down. Factories in China shuttered, workers were sent home, and American exporters scrambled to find new markets for their goods. Virtually all goods traded between the two nations became unprofitable, grinding commerce to a halt and creating a near-total blockade. The once busy border crossings and freight yards now stood eerily silent, a stark symbol of the new economic reality. The U.S. didn't stop there. It rolled out a new global tariff framework, a baseline 10% duty on most trading partners, with China, and by August, India facing even steeper rates. International trade talks grew tense as countries scrambled to adapt to the new rules, and the list of affected nations grew longer by the week. The world's most significant trade relationship froze overnight, sending shockwaves through the engine of global growth. Financial districts that once buzzed with activity now faced uncertainty, as investors and businesses braced for the fallout. Supply chains seized up, and the intricate balance of manufacturing and consumption was abruptly halted. Assembly lines stopped, warehouses emptied, and the flow of goods that connected continents was suddenly broken. This was more than a trade dispute. It was the drawing of a new economic iron curtain, dividing the world into rival camps and forcing nations to reconsider their alliances and economic strategies. As the US and China disengaged, every nation was forced to choose a side or chart a new path in a fractured world. The era of global economic cooperation had ended, replaced by a new age of uncertainty, rivalry, and realignment. The tariff war sent tremors through the global system, plunging markets into chaos and fueling uncertainty. Investors watched in disbelief as volatility spiked, wiping out billions in value within days. The sense of unease was palpable, with every headline amplifying the fear that the world economy was teetering on the brink of something much larger. Oil prices tumbled, and the IMF slashed growth forecasts, signaling a looming slowdown. Energy markets, already fragile, became even more unpredictable, and the prospect of a global recession loomed over boardrooms and households alike. China responded by strengthening ties with Europe and Southeast Asia, building coalitions to counter U.S. pressure. New trade agreements were quickly drafted, and diplomatic channels buzzed with activity as nations sought to shield themselves from the fallout. India, hit by a 50% U.S. tariff, saw its exports threatened, and its currency fall, prompting a pivot to Russian oil. Indian industries scrambled to find new partners, while policymakers raced to stabilize the rupee and protect jobs. Even U.S. allies began hedging against American unpredictability. Long-standing partnerships were tested, and trust in the global system began to erode as leaders questioned what might come next. At home, tariffs fueled inflation, raising prices for consumers and complicating Federal Reserve policy. Everyday Americans felt the pinch at the checkout line, while central bankers debated how to respond to the new wave of economic shocks. The clean energy sector was hit hard, with tariffs on solar cells and wind projects stalling America's green transition. Ambitious climate goals suddenly seemed out of reach as costs soared and projects were put on hold. Export-dependent nations faced job losses and economic pain as global supply chains unraveled. Factories went quiet, and workers wondered when or if normalcy would return. The world's economic order was suddenly unstable, with every country scrambling to adapt. Emergency meetings became routine, and leaders searched for new strategies in a rapidly changing landscape. The era of predictable globalization was over. A new, uncertain reality had begun. As nations recalibrated, the world braced for a future defined by volatility, competition, and the urgent need to rethink what global cooperation really means. For decades, oil was priced in US dollars, anchoring American economic dominance. But the 2025 trade upheaval exposed the risks of relying solely on the dollar, prompting Saudi Arabia and Gulf states to reconsider their strategy. While oil exports were exempt from new US tariffs, secondary industries like aluminum and steel were hit, highlighting their vulnerability. The Gulf states began exploring currency diversification, considering trading oil in yuan, euros, or yen to reduce dependence on Washington. Saudi officials openly discussed settling some oil sales in other currencies, a radical shift from the past. This wasn't a rejection of the dollar, but a pragmatic move to manage risk in a changing world. The Gulf's search for options signaled a profound evolution in the global energy and financial order. With US markets closed, China turned urgently to the Middle East for energy. Middle Eastern exporters, now favored, signed major new deals with China, like the UAE's LNG contracts and Qatar's expanded partnerships. Saudi Arabia became China's top oil supplier, and talk of settling deals in yuan gained momentum. This shift was more than transactional. It deepened strategic ties and encouraged financial integration. Chinese investment poured into regional infrastructure, strengthening Beijing's influence. The more oil China bought, the stronger the case for bypassing the dollar. China's energy pivot was actively reshaping global finance and power. The US dollar's dominance has long underpinned American power, but 2025's tariff war exposed its vulnerabilities. Aggressive US policies pushed rivals and partners to seek alternatives, accelerating the trend of de-dollarization. Saudi Arabia's openness to yuan oil sales was a watershed moment, threatening the petrodollar's foundation. China, meanwhile, built a parallel financial system, currency swaps, CIPs, and yuan oil futures, offering producers a compelling alternative. The dollar's supremacy isn't collapsing overnight, but every deal settled in yuan chips away at its dominance. The shift is gradual but undeniable as trust in the US-centric system erodes. The cracks in the dollar's foundation signal a fundamental challenge to the post-war economic order. The world is moving step by step toward a multipolar currency landscape. These high-stakes moves have real consequences for ordinary people worldwide. In the US, tariffs drove up prices, squeezing family budgets and slowing the economy. In India, lost exports meant job losses and a weaker rupee, fueling inflation and hardship. The petrodollar's decline could make imports and energy more expensive in the West, eroding living standards. The global power shift is felt at the gas pump, in the job market, and on supermarket shelves. The rise of the petro-yuan and the questioning of dollar supremacy mark a transition to a multipolar world. While leaders debate strategy, everyday people bear the brunt of these seismic changes. The cost of this new era is only beginning to be understood. We stand at a turning point in economic history where the foundations of global finance are being reshaped before our eyes. The systems and structures that have defined the world's flow of money and power for decades are now being questioned, and new possibilities are emerging. Saudi Arabia's move toward the yuan is more than a financial decision. It's a symbol of a world in flux, as the era of dollar dominance fades and new alliances take shape. This shift signals a growing willingness among nations to explore alternatives to the traditional financial order. The future could bring fragmented blocks and competing currencies, or perhaps a more balanced multipolar system where no single nation holds all the cards. As countries seek to protect their interests, the global landscape may become more complex and unpredictable. De-dollarization is accelerating, with more countries likely to diversify their reserves and trade. Central banks are rethinking their strategies, and emerging economies are asserting their influence, eager to reduce their dependence on the dollar and gain greater control over their financial destinies. Commodities may soon be traded in a basket of currencies, reducing the power of any single nation. This could reshape global markets, making them more resilient but also more complicated, as businesses and governments adapt to new rules and standards. This transition will be volatile, with new risks and opportunities for all. Markets may experience turbulence as old certainties give way to new realities, and investors will need to stay alert to rapid changes. America's influence will likely wane, while China's stature grows with the petro-yuan and its expanding economic reach. The balance of power is shifting, and the world is watching closely as these two giants redefine their roles. Nations will have more choices but also face new dilemmas in a world of shifting alliances. decisions about trade, investment, and diplomacy will become more nuanced, as countries weigh the benefits and risks of aligning with different powers. The tectonic plates of global finance are moving, rewriting the rules of money and power. This seismic shift will have far-reaching consequences, affecting everything from international trade to the daily lives of ordinary people. Every nation and every citizen must navigate this complex, uncertain future, making choices that will shape not just economies but the very fabric of our interconnected world.